This Tuesday, January 20th, at the BMO Center, we had the Calgary Real Estate Board forecast for 2026, where we saw CREB's chief economist, Anne-Marie Lurie, and ATB's financial chief economist, Mark Parsons. They shared their insights on where they see the market in Calgary going. Here we are. Let's dive right in. It is quite nuanced, and so I'm happy to chat about a particular situation. If you're looking at a neighborhood, a market segment, a price point, there it is very nuanced, and this is just a general overview of the market as a whole. 2025, it seems like conditions from 2025 are carrying over into 2026. Balanced market conditions expected to persist in 2026, depending on property type. And here's a quick summary. The housing market transition from one that favored sellers to more balanced conditions as improving supply in the home, rental, and resale markets occurred just as demand returned to more typical levels. Still positive on the migration numbers, the net migration numbers in Alberta and Calgary, but nowhere near where they were in 2023 and 2024. Let's see, there are some forecasted risks in terms, and some are positive and some might be negative, but in terms of policy for our energy sector, and then U.S. Tariffs, and then an agreement, the Canada, U.S., Mexico agreement creates some uncertainty unless they're settled. Let's see, GDP growth. It's looking like these are negative with the red arrow going down, but they're positive. They're just lower than what was expected. So 2.1 expected GDP growth for Alberta. Oil, West Texas International projected to be down as well, 2026 from the 2025 forecast. So, of course, in Alberta, we are still very much affected by the oil and gas sector. Employment is down negligibly 0.4% in the forecast, and then which is down from 2025. Unemployment rate is expected to be down as well from 2025. And then there's some segments within the market where we had some growth in job gains. Here we go. Alberta's population growth. So down 2.5% from 2025, but still a 1.5% projected population growth, and a 1.3% in Calgary. So we can see people are moving to Alberta. Alberta is the place to be. Calgary, unfortunately, not the number one place to be. Edmonton and Red Deer are growing as well. I think that's more towards affordability, but Calgary is definitely growing quickly as well. And the bulk of people within Canada are coming from Ontario, and then BC is number two, but people just love to be in Calgary and Alberta. Here we see migration numbers. So 22, 23, 24, rip-roaring numbers here. We're still positive. The only time that I can see that we were looking negative numbers was 2016, 2017, where we saw actual net losses in the population. So we're returning more towards balanced levels, but we are still seeing more people coming than are going, which is good. And then new home inventory. So this area here, shade of green, is really apartments. So we saw huge inventory in apartment levels from about the mid to end of 2015, and that carried over into 2022, where it was mostly absorbed, right? So that really created soft market conditions for apartment condos, and that is the sector that will be most affected into this market here as well. Housing starts are forecasted to go down 34%, which is great because our migration levels have declined, and so housing starts should come down to bring themselves along with where we're at there. There will be an oversupply for the next couple of years, I think, which we'll get to. Here's rental vacancy rates. Projections, or these are for 2025, sorry. Rental vacancy rates throughout the city. We're looking at the projections. So international migration is still the biggest flow of people to the province. but interprovincial it's now closer to that international migration. Apartments, I'm going to do a quick summary of these. I don't want to get into the weeds on all of them, but the inventory's up, sales to new listings ratio is down, and new listings down slightly, sales down almost 30%. So apartments in the city center is the bulk of the activity share of sales. So a lot of these apartments, and that just means, there's a lot more apartments down towards the core, as that's where the higher density tends to be. Row housing, so inventory in the row housing down considerably, and the sales to new listings ratio is down as well. New listings are up, and then the sales down about 17%. Semis, looks like we're still negative about 8% on the sales volume for semi-detached. Detached housing down about 8.7% as well. Inventory's up. And detached market, let's see. Here's a comparison of the surrounding areas in Calgary. So we've got our benchmark price and months of supply. So we're still looking at a seller's market, but more towards a balanced market than we have been in the past. Airdrie 3.2, these are the benchmark for Chestermere, Strathmore, High River, Okotoks. You can see all these. Canmore is still making good gains in spite of the supply being into balance to even buyer market conditions there in Canmore. The supply growth is still happening, the price growth is still happening. And then these are more nuanced. I have a report. If you're interested in seeing this report, I can send you the PDF. Just send me a message. I'm happy to send it out to you. We're just going to rip through here. And this is the meat and potatoes of the whole report. Where are things expected to go? Obviously, there's employment, interest rates, commodity prices, net migration. There's a lot of factors at play here. But realistically, what this means, these figures mean, is that as buyers, you have more selection. That property that you could be selective on now and find and maybe not compete on is something that would have had multiple offers and would have sold potentially even unconditionally over the last few years. So there is opportunity as a buyer to find a great home in this market. And then as sellers in the past, like I say, over the last few years, 22, 23, 24, sometimes you could price a little on the high side of the range, maybe even outside of the high side of the range, because ultimately you had the market momentum, and the market momentum could catch you. Whereas now it's important as a seller, you need to look at where the market is and be listed where the market is today. And there may even be a strategy, depending on where you're at in the city and what property type, that you want to get ahead of the market. And it might be even a little bit lower than what the last sales have been for comps. But that's would be on a case-by-case basis. So when we're looking at detached semis, rows, and apartments, this is the pricing, the growth 23, 24, 25. So detached, we're seeing growth negligible. And then semis would be the best performing sector. There's not a lot of semi-detached, especially new home construction there, but positive price projections for semi-detached. Row sales, row homes down 1.9% is the projection, and apartments with the inventories and demand levels and purpose-built rental stock, we're looking at projections of minus 3.5% on the city as a whole. So that's what we're looking at in the market in Calgary 2026. I'll keep updates coming as anything changes, markets changed, interest rates, which are projected to be relatively flat for the year. But I will keep you posted on any adjustments in the market or any news. Take care. Thanks for watching.